So when the very first world clock was invented, that is the pendulum in 1656, the world thought that was the biggest or the peak of inventions. We also read that when Graham Bell invented telephone, it was supposed to be the biggest and probably the peak of communication. But that didn't stop there. Technology kept evolving up to where we are now. Now we have smartwatches, and of course we have a lot of offerings around these two means of communication, talking about time and of course talking about communication via telephone. So with that, I welcome you to Techbridge today. And that is what we discuss on Techbridge each time we come on the show. We give you the latest, the offerings and better ways of doing things, new ways of doing things to ensure that at the end of the day, you have technology working for you the way you want it and not against you. I'm Sheyi Fumiola today. Welcome to Techbridge on Lagos Television.
The world keeps changing, so do technology. For you to succeed in life, in career and business, you need a bit of technology. You need to align with technology. I welcome you to Techbridge today. My name is Tony Alagoke.
Okay, so let's talk about our relationships today. We see that in the layman's language, for two people or let's say couples to have a very good home, they must have something in common. They must have some traits that could connect them. It's called connecting factors for both of them. And when we see technology, it's like it attracts every sector of the economy. It can easily get married to any of them.
Yeah, technology is actually what we call enabler. It enables a lot of things. And that's why I said, for you to succeed, you need technology. For you to project what you want or what you want to achieve, you need technology. Talk about economy. Economy cannot stand alone. There has been so much changes and permutations and innovations. So technology has come to enable what we need to. In those days, when you want to do any transaction, you have to do the traditional one. But now you have everything electronically based.
And probably that is the part we see that technology is actually at the center of it all. So let's look at the relationship between, or call it the marriage, between the financial sector and technology. That is our focus today. We are focusing on technology and, of course, economic growth. We've got someone who's going to speak to us about that on this show today. We'll go for this quick break and we'll be back. Please stay with us. All right, thanks for staying with us. It is still Techbridge on Lagos Television. We were talking about some form of marriage the other time. We were talking about how technology is actually a very beautiful bride, or what do we call it, for every other guy out there to get married to.
It's actually the bride because you call it marriage. It's actually true. Before you have financial world, you have technology world.
Yeah.
But at a point in time, there is a marriage of financial and technology, and we call it FINTECH.
FINTECH, the same way we have it, like what used to happen now, what happens now, where we have someone that bears Ola and someone that bears Fumi getting married. You see Ola Fumi 2020.
So you just assume it's one name.
Yeah, so
the FINTECH has actually come to stay. And in the last almost 8 years now, it has been the enabler for the economy itself. So financial world, technology world married, and they are now enabling even the economy of each country, depending on how fast you think your country can go, depending on the enabling laws that you have also.
So let's connect with Charles Ifedi. Charles Ifedi is one of the, let's call him one of the best hands when it comes to the evolving fintech solutions in Nigeria. And he's presently based in the US and is connecting with us via Zoom meeting today. Charles, thanks for joining us on today's episode of Techbridge.
No problem. Thank you, Sheyi, for inviting me as well.
Okay, so let's pick it from this place. you are a very big fish when it comes to fintech in Nigeria. So let's look at a little appraisal about what was the situation before that time you intervened. Just let's have some appraisal about that.
All right, thank you. Thanks for that question. So for us, fintech is a term that I would say for the first time people actually started using it extensively was sometime in 2010. But much long before that time, people are already providing different financial services using technology. I mean, looking specifically at the Nigerian market, I would say the very first set of fintechs were started between 1997 and 1999. I mean, but they didn't have the significant impact that we would have wanted them to have until when the likes of Interswitch and eTransact came in 2002, 2003. That was when the real changes and the real improvements started happening. And the additional complexity that we had for the guys in 97 to 99 was the telco infrastructure was not good. The connectivity was poor. So Interswitch and eTransact had the advantage of coming 2-3 years after the telcos came into being. So when when infrastructure started coming into play, that was the right time they came into play. So sometimes also timing is very, very important. Prior to creating anything that was online real time, if you wanted to go to a bank to get money out, you're going to get to a bank and you're going to queue up. You're going to, in fact, in my office in those days, when one person is going to the bank, everybody just brings out their checkbooks and gives that person going to the bank and let that person be the one that's going to stay as long as he needs to stay at the bank and get money back for everyone. So transition from a time where it was completely offline, you spent a lot of time at the bank, to a time whereby ATMs are now very, very prevalent and popular. It wasn't until 2005, 2006 before we started talking about online real-time point-of-sale terminals, and even later on before we started thinking of e-commerce platforms like web payments and other things like that. So think about it, that has been how we've significantly grown. Started off from ATMs, moved to POSs, also introduced web, and then that is how we're able to introduce all these other electronic services that people can now sell from online. If you think about it, if there was no e-commerce in Nigeria, COVID would have even been a lot more tough. It would have been a lot tougher for a lot of people, because that means there'll have been no ATMs to go and withdraw money from. You wanted to buy electricity token without leaving your house to go to PHCN. Those are things that didn't exist in 96, 97, 2002, when all this electronic, the current phase of e-payments in Nigeria and fintech has really grown.
All right, Charles, that's a wonderful one. Let me ask you, yes, because I know you have at least the history of the fintech itself way back 2001 or so. Where do we stand with all this deployment? Because before, when you talk about technology, people look at network, payment, but now we have the marriage of the two. So where do we stand now in terms of the deployment when it comes to lending, transactions, borrowing and opening of accounts, and all manner of enabling things about banking transactions?
Well, things have changed very, very significantly, and for the better. You can imagine the availability of technology we had in 2002, 2010, and even 2020, are very, very significantly different. And the other things is that as things are being developed in and deployed in other parts of the world, we also leverage them. We also leverage them in Nigeria as well. So ATMs are now commonplace. You go everywhere, you see an ATM, you even see queues. So that means people have actually started becoming a lot more confident in ATMs. You now have point of sale terminals. You now have web payments. You also have QR code payments that have been introduced. You have USSD payments that have been introduced. You have mobile banking. You have internet banking. This is just, once you can think of a way technology can support financial services, that's really what fintech is all about. So QR code payments is one way to also make payments at the merchant location without POS, without any physical contact. USSD is one way to do it as well. So when you think about any different technologies that didn't exist, so USSD started being used in Nigeria around 2011, and now it is very, very popular. You want to buy airtime, you dial star something hash, and you buy your airtime. You want to transfer, you can use star something hash of your bank or any other service provider to do the transaction. So a lot of new technologies have been introduced here, in Nigeria. when you look at it globally also different areas have been introduced. We now have a lot of digital banks, which haven't been very successful in Nigeria yet, but you have a lot of digital banks. You have a lot of providers of electronic transfers. You have remittances. You have several use cases around the world that have made it possible to move money from one person to the other in real time. You have cards also have evolved very, very significantly, and cards have made it possible to travel from one country to another and withdraw money and spend with complete ease. So globally, things continue to evolve as technology continues to advance, as things get cheaper and cheaper. It makes it possible and makes it easy for people to continue to leverage technology and apply it to financial services. So because of the amount of electronic payments that has been going on, there is so much more data about a human being that is now available. And so although it is without collateral, it is not as though it is without any assessment of who you are. So if you think about it, you withdrew money at an ATM, you spent online, you bought airtime, you did various things. So you, as a human being, you have a digital footprint of some sort. So when you now come and say you now want to borrow money, what these lenders will definitely do is using some kind of algorithm, they will go and evaluate your digital footprint, or let's say your financial digital footprint, and see how risky is it to give this gentleman money. They know that someone that, for example, spent 40,000 naira last month in total of all his expenses, if he wants to borrow 10,000 naira, he's not a flight risk. He's not likely a flight risk, except something fundamental changes in his life. So versus someone that has, in the last month, the total expenditure, financial footprint the person has is 2,000 naira, and the person comes to borrow 10,000 naira, you can see clearly there's a significant risk in that person. Or if you go and check and say, okay, what has been the average balance the person has had in his account for the last 6 months, which is like another part of digital footprint. What has been the average balance he has had? And the average balance is 100,000. You know that if he's coming to ask for 200,000, it may be a bit risky. So maybe I should be asking him, okay, I'll offer you 30,000 instead, because I'm sure that 30% of your average is more likely something you can pay back versus twice what your average has been for the last 6 months. So what really happens is access to your data in several places, whether you bought airtime, whether you paid a bill, whether you did a transfer, leveraging your data in several sources is what is able to give a person a score. Then we have the advantage of having the likes of the credit registry companies in Nigeria as well, where you can actually go and check whether people have defaulted their payments at banks. And so you can also use that also as a negative footprint also to say, okay, is this person a risky person, or is this person not a risky person? Now, globally, we have access to even much more data about people, and there are several algorithms that these lenders use. Some lenders even use who are your Facebook friends, how often do you post on Facebook, what school did you go to. So as long as you have digital footprint, they use several things about you to determine how likely is this gentleman going to pay. And what happens is that when they look at, it's all about how have people like you behaved? People that have your same kind of demographic, how have they behaved? People that have 2 kids, how have they behaved? People that are going to this kind of school, how have they behaved? And so that's what lenders basically use, the general data about you, and take a decision based on how likely are you going to pay. So with that, they will decide what interest rates to give you, for example, and they will decide how much they are willing to give you and for how long, based on the data about you that is out there.
Okay, so thanks for that explanation, Charles. Now, I want you to answer this objectively as much as possible. For customers, we know that when it comes to all this modern deployment of FinTech solutions, it comes with some deductions here and there. And what we get from customers is that it's on the high side. The deductions are really much, they're on the high side. So do you share that same opinion as well?
Since I'm a service provider, it's difficult for me to objectively say that charges are too much. But the reality is, I think we still have one of the lowest charges in Nigeria than in several other countries. Now, I know there are certain differences. There are certain differences that some countries may also have when it comes to when it comes to the services that you go and withdraw. So that you enjoy benefit from. So if I went to withdraw money in another bank's ATM here in the US, I get charged about $3, right? And the thing that whether I'm withdrawing $20, $100, or the maximum you can withdraw is $400, right? I pay $3. So if you think about it, $3 in Naira terms is 1,200 Naira. Well, depends on which exchange rate you use. But you now hear that, when I go to the UK, it is free of charge. But it is not really free of charge, because what happens is that the bank whose card you use is paying. The reality is, as long as one person complains, everybody else will complain. But if consumers actually do take the time to think about the value they get or the alternative to the price that they are paying, they would be paying so much more. And so that's always been my recommendation. So I personally do not feel that the value is not significant enough for the charges, but that's my own personal view. If I want to transfer money here in the US, immediately $15, in 1 day $5, in 3 days $1. So that's how the pricing differs. So if you think about even the cheapest, which is $1, I get the money in 3 days, is so much more expensive than what I pay in Nigeria, which is 50 Naira, 52 Naira, 50 kobo. When ATMs and all these services started in Nigeria, the price to withdraw money from an ATM was 100 Naira per withdrawal. That was what it was. When you go to another bank's ATM, it was 100 Naira per withdrawal, and nobody complained. And then in 2011, the central bank reduced it from 100 Naira to withdraw to free. Remember when the central bank did that in 2011? And of course, everybody was happy. The problem now occurred when it was clear that the banks could not subsidize this cost enough, and the central bank now attempted to increase it back to, after 3 transactions, you pay X. And that was when the outcry actually started. So the question that if the central bank had never reduced it from 100 Naira to free, would people ever have cried? So I'm not advocating that price should be high. I'm just, my own interpretation is that what happened in Nigeria was it was fine. Nobody was complaining about it, and it was made free. And the moment it was being changed back from free to something higher, then there was significant outcry in the market.
Okay. As we have a lot of development in fintech, we equally have some new development when it comes to blockchain. Charles, would there be any link between blockchain technology and fintech itself?
So blockchain is, just look at blockchain as a tool. I like blockchain. I believe in blockchain, but look at it as another tool that can now be added into the arsenal of these fintech providers to help them, like I said, either make their services faster, reduce settlement challenges, reduce reconciliation challenges, and potentially reduce the cost of providing services. So it's just, I see it as an additional tool that I cannot guarantee is automatically going to make fintech better, but it potentially could.
So that's huge. So having identified all the challenges, if you must suggest ways out of this, ways of improving fintech industry in Nigeria and probably globally, what would be your suggestions?
I'll recommend 2 things mainly. I'll recommend that the players should collaborate more. And I would recommend that regulators should carry the players along a little bit more and also listen a lot more to the players. And so collaboration between the players will help people share ideas, improve in general, and collaboration between the regulators and the providers will give both people a clearer view of what each person is thinking about, how they would like licensing to occur, how they feel pricing will come down without regulation just determining it single-handedly on how pricing should come down. So improve collaboration also between the regulators and the providers is the second thing I would recommend. In terms of technology as a whole to adopt, like I said, technology is going to be adopted as new use cases are identified, and as more providers exist, new use cases will come naturally. So I'm not going to make a recommendation in that particular area.
All right. Thanks so much for that explanation. Charles, we appreciate you so much for this time you've granted us. And of course, sharing your wealth of experience with us. We hope to connect with you some other time.
You're very welcome, Shay, for me. I look forward to speaking with you again. Thank you for having me as well.
So that was Charles Ifedi, and he's been talking to us about fintech and economic growth. And for me, I have some specific interest in some of the things he said. And that was the part he started talking about how fintech has transformed lending to the point that you don't necessarily have to present any collateral at any bank. You can actually borrow money via an app on your phone without interfacing with any physical person. Yeah. And he said it's because of digital prints and all the data collected online about us.
That is how good the fintech has gone, because when that thing started, a lot of people were scared. But over time, they've been able to win the trust of the citizenry, the government, and the people. And now they introduce they inculcate all the operational aspect of banking itself, to the extent that you can open an account even without meeting
without
the banking officer.
Yeah,
you can do your transaction, you can pay. And currently, we have what we call mobile banking, agency banking.
Yes.
Agency banking means they just subscribe, they just put out some aspect of the transaction to individual.
Not necessarily the banking whole.
Exactly. So even there are businesses for people. There are businesses for individual. You can be an agent to a bank where you can do a kind of banking transaction, lending, and all those stuff. That is power of fintech.
It's really, if you ask me, it's cute. Because at the point, I began to go back in time to the time that we had to queue in the bank, and you have to go with your passbook. And if you have to open an account, it's pages upon pages of things to fill. And now everything is just at the punch of star something, your account number is ready and you start transacting.
You actually have different legs of the fintech itself, and that is a good thing. The researchers have just told us recently that we've not even explored up to 10% of what the fintech can do.
Seriously?
Seriously, because you have different layers of this fintech which people are keen into. You have online store, you have USSD, you have POS, you have ATM, you have online banking itself, and you have a number of other things that you can do that people can just think about and see how they can implement. So I think it's a good one for this nation.
Yes, he also talked about the deductions here, and that was the part he mentioned, that the deductions on transactions in the US is actually higher. That if he had to make a transfer that you deliver in a day, he's going to pay like $1 or $15 or so. It is even now $1 is like 400 naira. So even if it's to be charged $1, I think we are still good in Nigeria.
Yeah, because some people will still debate it anyway because of the economic possibility on themselves.
Yes,
but
really.
The transaction fee itself is still moderate for now. And we're going to get value for our money.
Yes, the value. Talking about the value, we have to look at the value compared to looking at the money in isolation.
Honestly, because if you have to go, if you have to go to the bank, you have to transport yourself.
Yes,
you pay,
the stress.
The stress you go through, you queue, you waste some time, and who knows what you will even face in the process of doing your transaction. But with your mobile banking, with your fintech solutions, you can easily do your transaction at a go without any issue.
Okay, I think it's a good marriage between financial sector and technology. Fintech, happy married life. So that's our show today. Many thanks for connecting with us. Remember that Techbridge is available on Facebook. We are Techbridge LTV. And of course, on YouTube, we are Techbridge LTV as well. Do remember to subscribe to our YouTube channel so that you can have a prompt of this fresh episode and all other previous episodes we've uploaded. You'll watch them at your own pace again and again. So till some other time, keep innovating, keep achieving more, and keep leveraging on technology. I am Shoyi from Yola today. Bye for now.
On this show, I've said it several times that for you to go far, you need a bit of technology. So keep innovating, keep automating, because this will really help you to take your business far and farther. My name is Tony Alagogo. We have to go for today.